Hello, welcome back to my channel, Learn Value Investment with Manan Shroff. Here is the disclaimer as usual. So today, one of the group member asked me about Thermo Fisher Scientific. It falls into the category of diagnostic and lab test, and they make equipment and instruments for that. And we're going to check it out if it's a good price to purchase or not. So without further delay, I'm going to go to the Thermo Fisher Scientific. You can say the Thermo Fisher Scientific is currently trading at $532. Excuse me. If you look here, as a PE ratio is about 28. Earning per share is $18. Okay. 2022 is almost, I think one quarter is left. So if we want to go ahead and look the forward PE, which is for 2023, we probably paying 22 times. 22 times. So if you go to analysis, then this is the average estimate from the 24 analyst. So if you divide this one, if you divide market price with this price, you will get the PE. So in this case, 532 divided by 24.39. Okay, so it's almost about 22 times PE. Okay. Okay, then in current market, P over 20 is going to be especially if it's not a technology company, you are paying little high price. We can compare it with a different measurement, but if I go for these type of companies, I like to pay about 15 times, which I have seen its chart, and it's been quite overvalued for quite a long time. But I will show you why. So before I go, like, I don't know top of my head what the industry PE, because the industry PE also make a lot of sense. If all companies in that particular industries are trading at higher PE, you have to consider that too. So I went into the profile and I found that it's in the diagnostic and research group industry. Okay, so before we go to that, let's check the cash and debt. So I didn't like this part where the most recent quarter cash is 1.89 billion. Usually what I like is the cash supposed to be half of the debt. I mean, that's what I believe that those type of companies have the good balance sheet. In this case, cash balance quite low compared to the debt balance. If you see the total debt around 30 billion, I expect here cash around 15 billion. So that is one red flag. I mean, it's not a red flag, but what I'm saying, like some companies, they just keep investing into the other acquisition and stuff like that. So it's not really the bad case for this company, but I would rather like half cash balance of total debt, if it's possible. Now, these figures are good: profit margin, operating margin. Okay. If I go to the next 5-year growth, that is another thing where I'm thinking that we are paying very high price because remember, I have been telling you that I don't know how accurate the next 5-year growth projection on Yahoo Finance, but that is what I have. And I have to consider that one. And anytime, like, if you want to quickly evaluate, multiply the next year earning with the next 5-year growth, and it will tell you. So in this case, the stock should be traded around 8 times PE. Okay, so if they are making 24.39 times 7.89, I like to play around $192, which is not the case. You can see that it is trading $532. But even if the next 5-year growth is 7.89, you can pay up to 15 times because it's a standard company, it's a well-known company, it has a good revenue and stuff. So let's think about, let's say we want to give multiples 15 times. So $24.39 multiplied by 15. So I would rather buy Thermo Fisher Scientific at the price of $365 or below. Looking at the current market, I'm thinking that paying 22 times earning for this company is little overpriced. And surprisingly, what I noticed that if you look other companies that falls into the same category, for example, IDEX Laboratories. If you look, their forward P is 36 times. If you look their analysis growth 9 times, they are overvalued. If you look Danaher Corporation, if I look all of them have the similar kind of forward P is high, 26 times. I don't know, institutional investors are purchasing a lot more, probably diagnostic and research companies right now, and that probably have inflated the P. But I see the inflated P in every single company. If I go to the Stryker Corporation, which is also belongs to the same kind of category, its forward P is 22. You can also notice that most of these companies have the very less cash. So I don't know, that is something that is industry specific, because here also I was assuming that they're supposed to have a cash balance of 7.5 or 7 billion rather than 1.13 billion. So if you look at the Danaher Corporation, let's see, they have a debt about 21 billion. I'm looking here, cash figure about 10 billion. IDEX Laboratory, if I go to the statistic, let's see how they are. They are in pretty bad. They have cash balance is 114 million, which I was expecting about 700 million, half of the total debt. So they all have the same characteristic. You can see the very less cash balance. Second, high debt. High debt, I wouldn't say high debt, because if you look the net income or EBITDA, they can pay off their debt within 2 years. So in that mark, they pass the test, all of them. If you look Thermo Fisher Scientific, if I go to statistic, okay, their net income is 7.44 billion and the debt is 30 billion. So within 5 years, they can pay off entire debt. So that is good. Danaher Corporation, net income 6.21 billion, can pay off their entire debt in 4 4 years, a good striker. Net income is 2 billion. I think debt is on the striker. It's a debt is little higher because it's going to take 7 years. So we notice that one common things in all these companies that fall into this particular category. And what we see that they are trading at high multiples. Their growth is not that high. So it looks like the institutional investors are trying to find the safe companies in the current downturn of the market and probably putting all money into these type of safe companies, which ultimately is inflating their price to earning ratio. And if you ask me about 1 or 2 years ago, that would make sense to pay higher PE, 22 times, but not today, because let's find it out, the earning yield of Thermo Fisher Scientific, okay? So in order to find it out earning yield, what you have to do is whatever PE you have, the company's forward PE is trading around, or even trailing PE, in this case, 28 times, okay? We want to divide that. I'm sorry, we have to get 100 divided by that trailing PE. That will give us the earning yield, okay? So let's say it's 100 divided by 28.81. So their current yield, dividend yield is 3.47. Okay. Now, here also, look, I have the US Treasury chart for today. 10-year Treasury is trading at 3.56%. No doubt that 10-year Treasury is growing at 3.56%, 3.56% earning yield. And this company has an earning yield of 3.47. 10-year Treasury are the safest bet because they are backed by US government. And here, in case of Thermo Fisher Scientific, you are getting 3.47% earning yield, which is less than 10-year Treasury bill. No doubt that Thermo Fisher Scientific is growing at 8%. So if you see the next 5-year growth is about 8%, right? But again, so current earning yield is less than what you get from 10-year Treasury bill yield. So that also says it's overvalued. Only time you can pay over 10-year Treasury bill when the company is in the high growth mode. When next 5-year growth is 25%, 20%, 18%. In this company, the company is mature. So all these factors are telling me that the Thermo Fisher Scientific or any companies in this form, in the category, diagnostic and research category, is overpriced, looking at the given market condition. Another thing, I always use the fast graph. I like that subscription. It's great because it tells me how the Thermo Fisher Scientific has been traded. And you can see whenever, so the normal P ratio is 20. So what does it mean? The normal P ratio 20 is, since the beginning, it's all the way up to here, their average P ratio is 20. So they are trading at high multiples, no doubt about it. I mean, 22 times, it's close to 20, right? So you are not getting at the bargain price, for sure. You are paying, if it can hold the 20 times earning multiples for next decade, still you are purchasing not at bargain price. You are buying it at the 20 times PE price. But let me show you also that if you look, this company, so starting from December, 2017, it's trading at a high multiple, which actually justify, because at that time we have a very low PE environment. So at the when 10-year treasury bill trading at 1%, 1.5%, you can pay 22 times, 20 times for these type of companies. If you go back to December 2011, their P was 12. Okay, so they were undervalued from 2010 to, I believe, up to here. So in this portion, they were undervalued and trading or 13 times, less than 15 times, or even lower than that, probably 10 times, here, 10 times. So, and this was the recession period, if you remember, 2008. So what I'm expecting that this should trade it around here. If it were traded here around 11 times, 10 times P, then I will go ahead and buy it because it's a great bargain price. But currently, it's not a great bargain price. And this is the earning. You see that they are up for last decade. Mainly, they were very close to this orange line, but now they are going far away from the orange line. So that also indicates it's overpriced. So based on all these factors, I would say don't buy Thermo Fisher Scientific right now. You are paying too much high price. For me, if I want to buy the Thermo Fisher Scientific, it's a good company. I would go with the lowest P, which was available for me around here, 11 times. So 12 times. So if you see the next year earning is 24.39 times 12 times earning, I would say around $292 or $365 based on 15 times PE. But I would not pay $532 for this company right now. And also its dividend yield is also that it's not that great. I mean, it's only 0.22%. So I am 100% sure it's overvalued. If you purchase it right now, you won't get a good rate of return on this company. If you really like my video, please share it with other people. Please subscribe, because what happened that once you subscribed, it motivates me to make more videos and to share the knowledge, what I have accumulated in last 25 years. So please subscribe to the channel if you haven't subscribed yet. And I will come up with more videos. Goodbye. Thank you.